Welcome to Financial Insights in Minutes. Today, we're diving deep into the upheaval in the housing market, where mortgage applications have plummeted to alarming lows, down 44% from pre-pandemic levels.
Exactly. With corporate landlords tightening their grip and potential homebuyers remaining on the sidelines, we have crucial insights to share.
Joining us are industry experts like Jason Walter, who will help illuminate this complex situation and its implications for the Texas housing market. Stick around as we explore the key takeaways from today's discussions. Let's jump right in. Our first hot topic today is the housing market struggle as mortgage applications plummet, now down 44% from pre-pandemic levels.
Here's the complete report. Mortgage applications have reached lows not seen since 2008, leaving many homebuyers caught in a waiting game amid declining values and stagnant demand.
What's the real issue at stake in this real estate dilemma? What does the current landscape truly reflect?
The core thesis unveils an alarming drop in buyer demand. Mortgage applications have fallen to levels unheard of since 1995. Yet, even with lower interest rates, buyers are not returning.
Let's examine these startling numbers. What trends are emerging?
Without a doubt, mortgage applications now lag by 44% compared to pre-pandemic levels, indicating a distinct lack of interest from buyers, a concerning sign.
And how are interest rates shaping up? Are we witnessing any improvements?
Despite rates dropping to 6.4%, buyers remain cautious, reluctant to re-enter the market. This creates a precarious imbalance.
How are home prices reacting? Are they finally taking a hit?
Yes, in some regions, home values are plummeting, with one notable example being a 25% drop in areas like Dallas. Sellers will need to recalibrate their expectations.
What are the preferences of buyers? Are they ready to re-engage?
Poll results reveal a shocking truth. An overwhelming 65% of buyers want home prices to fall by at least 30% before making any purchasing decisions.
What insights does the future hold for housing prices?
Prices must continue their downward trend if we hope to rekindle buyer interest amid ongoing caution.
What can we anticipate regarding interest rates?
The approaching federal cuts could spark panic selling as sellers realize that lower rates don't guarantee a return of buyer demand.
To summarize the key conclusions, what have we uncovered today?
The message is clear. Without significant price reductions and shifts in buyer expectations, the recovery of the housing market remains uncertain.
What should homebuyers be aware of moving forward?
Buyers may find potential bargains as the landscape continues to shift. Patience here could be rewarding.
Now let's navigate today's currents with our guest, Michael Ferris, who will share some shocking revelations about the housing market.
Michael brings invaluable insights from his experiences in banking during the 2008 crisis, perfectly suited to illuminate today's market climate.
What is the core thesis we're examining today?
Essentially, the housing market is teetering on the brink of collapse, with many buyers taken aback by inflated prices and misleading data from major real estate platforms.
What's the current situation regarding housing demand?
Demand is strikingly low, particularly with mortgage rates hovering around 6.4%, rendering homes unaffordable for numerous buyers.
What about Redfin's reported data? Are those numbers trustworthy?
Redfin faces scrutiny for miscalculating median sales prices, creating an inflated perception of market health that could mislead potential buyers.
How about buyer's remorse? Surely that's a heavy concern.
Indeed, recent surveys indicate that up to 93% of buyers regret their purchases due to rising costs and uncertainty.
What do experts forecast for the housing market's future?
Predictions suggest prices may continue to decline, inflicting greater economic strain on both buyers and sellers.
What's the outlook on delinquencies?
We could witness a dramatic increase in delinquencies as the market continues its downward spiral, reminiscent of the 2008 crisis.
How will federal policies impact the housing market?
Federal policies could further complicate the housing crisis, raising additional questions about the market's long-term viability.
So what are the key takeaways from today's insights?
Grasping the realities of the market enables buyers to make informed choices. Vigilance and community support remain essential.
What do you think about the current housing market dynamics?
Share your thoughts below. Let's keep the conversation going and support each other through these changes.
Let's navigate through Ken McElroy's perspective on Kamala Harris's tax proposals and their potential effects on real estate.
This isn't your standard political discussion. Ken's insights stem from over 16 years of investment expertise across various administrations.
What's the main thesis today? What do these proposals signify?
Harris aims to implement a $25,000 tax credit for first-time homebuyers. While this seems beneficial, it could inadvertently escalate demand in a market already struggling with supply issues.
Ken emphasizes that as demand skyrockets, what's the conclusion?
Tax credits may support home buying. However, without a corresponding increase in supply, home prices could surge even higher.
And what of the child care tax credit? What's the latest?
This increase aims to assist families grappling with surging childcare costs, exacerbated by inflation. It's essential to recognize the true economic pressures at play.
That's a notable increase. How will this affect real estate investments?
Higher capital gains taxes might deter quick property flips, leading investors to hold on to properties longer, drastically altering the landscape.
Unrealized gains taxation is another hot-button issue. What are the potential repercussions?
Implementing a tax on unrealized gains sounds appealing, but it raises crucial questions. How will this be enforced? Market fluctuations mean constant changes in valuations.
How politically charged are these proposals?
There's a delicate balance. If these taxes burden middle-income earners excessively, it could backfire in upcoming elections, making voter sentiment a vital factor.
As we peer into the future, what signals does Ken see?
Increasing buyer activity from tax credits might fuel a pricing bubble. The housing market could experience volatility akin to pre-2008 scenarios.
So might investors hold back? What's the reasoning?
Absolutely. Higher taxes could instill uncertainty. If these changes materialize, investors may need to reassess their strategies to navigate these turbulent waters.
Ken underscores a cautious approach as we face unfavorable tax changes. What steps should investors take going forward?
Staying informed is paramount for investors. They must be prepared to pivot and adapt their strategies in response to evolving tax implications. A storm is brewing out there.
As we wrap this up, we want to know how you think these proposals will affect the housing market. What are your thoughts?
Share your insights in the comments below. It's pivotal to stay engaged as these proposals unfold.
Let's dive into an eye-opening story. Today's discussion centers on David Rebels and his experience with Clayton Homes.
Let's cut to the chase. David's account uncovers numerous red flags in the affordable housing market, particularly within the realm of manufactured homes. His tale could prevent future buyers from a major headache.
What's the core message of David's story?
The heart of the matter is that while affordable housing seems appealing, it frequently harbors hidden pitfalls and challenges, exemplified by David's struggles with the delivery, financing, and quality of his Clayton home.
Ready to dig deeper into the critical points? Let's start with the misleading marketing.
Manufactured homes marketed as modular can be misleading. Regardless of upgrades, if it's still on a chassis, it's classified as manufactured.
Now let's discuss financing.
David learned firsthand how financing through preferred lenders led to shockingly high interest rates, revealing a system that often favors the lenders, leaving buyers financially strained.
What about construction and delivery matters?
David faced significant delays due to neglected land preparation and delivery issues, raising crucial questions about construction standards.
How did he fare regarding warranties?
Despite having a warranty, David encountered numerous challenges, receiving timely support for problems like water intrusion, highlighting the tangible gap between promises and reality.
And what about consumer protection?
David's ordeal emphasizes the absence of strict regulations for manufactured homes, leaving consumers exposed and without significant recourse.
Let's glance into the future. What does David's story predict?
As more narratives like David's emerge, we may see tighter regulations on manufactured homes, ensuring better buyer protection moving forward.
Are there other predictions on the horizon?
If dissatisfaction continues, we might witness buyers steering clear of manufactured homes altogether, gravitating instead towards traditional housing options.
What vital lesson can we glean from David's experience?
Ultimately, it's crucial to conduct thorough research. Comprehensively understand your options, secure everything in writing, and always consider professional inspections before making a commitment. Avoiding pitfalls could save you a world of trouble.
How can we arm ourselves going forward?
Being vigilant is key. Research home builders, read reviews, and don't hesitate to consult professionals. Your future home and peace of mind are worth it.
As we wrap up, what do you think about the current state of affordable housing?
Share your opinions in the comments. Let's keep this conversation going about navigating the housing market and avoiding pitfalls.
Let's navigate the reshaping landscape of the U.S. housing market. Notable changes are on the rise, with asking prices leveling off and inventory steadily increasing.
Here's the detailed report. Data from Realtor.com reveals significant trends. From price reductions to heightened inventory, there's a wealth of information to unpack.
What's the overarching trend at play? What's driving this shift in the housing market?
The core thesis indicates a cooling housing market, with asking prices down 2% year over year and inventory remarkably up 38% from last year, leading to extended listing times.
Let's start with prices. Are buyers finally gaining some leverage?
Absolutely. With asking prices down for 10 consecutive weeks, buyers are finding it easier to negotiate in this climate.
And what about inventory levels? Are they soaring high?
Indeed, inventory levels have spiked by 38% compared to last year, providing buyers with more options and enhanced negotiating power.
How are homes holding up in terms of selling speed?
Currently, homes are taking on average 8 days longer to sell compared to last year. This prolonged sale duration is contributing to rising inventory.
Price drops are also creating a buzz.
Definitely. Price drops have surged by 34% this year, revealing how sellers are reacting to the shifting market dynamics.
Let's don our forecasting hats. What should buyers and sellers brace for?
The outlook suggests that prices will likely continue to soften, particularly given the low affordability levels and seasonal trends slowing down sales as we approach winter.
What's in store for the future of the housing market? Are any storm clouds approaching?
It seems the housing market could remain stagnant, with sellers needing to adjust their pricing expectations in light of increased inventories.
And regarding affordability, will it sink the ship?
It's tough to say. High mortgage rates continue to indicate that affordability will be an ongoing challenge, influencing the types of buyers entering the market.
So, what are the key takeaways here?
To summarize, the U.S. housing market is slowly transitioning to a buyer's market, marked by flat pricing and rising inventory. Buyers hold the advantage, but affordability remains a critical question.
As we wrap up, here's a thought. What strategies should potential buyers adopt?
Drop your thoughts in the comments. Your insights could shape someone else's buying strategy in this evolving market.
As we've heard from our insightful guests, the housing market is indeed in turbulent waters.
Absolutely. Jason Walter highlighted how the low mortgage applications reflect serious market inefficiencies.
And Kristina Smallhorn's points about corporate landlords really shed light on the rising affordability crisis.
Ken McElroy and Michael Ferris brought interesting perspectives on the implications of high interest rates and growing inventory.
It's clear that while there are common concerns, each expert sees different angles to the problem.
Thank you for tuning in. Your awareness of the housing landscape is vital now more than ever.
Don't forget to like and subscribe for more expert insights that can empower your financial decisions.
And if you want to stay ahead in the game, check out our other videos on this channel.